Hello Maverick traders, this is Imri and welcome to today's currency recap. It is Thursday, November 9th. So today we'll be doing a review of the trading day. We'll be going over any meaningful news, taking a look at the broader equity markets and commodities. We'll be doing some technical analysis on the major indices, taking a look at our proprietary currency baskets, and looking ahead to any major news reports to round out the week. And then finally, we're going to be taking a look at potential setups and opportunities in the crypto and forex markets. In this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable forex and crypto trader. Maverick Currencies is currently hiring serious technical analysts for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits. If you're a technical trader with a technically based trading system, we want to meet you. Click the application link in the description below this video. Now let's break down today's market action. Starting off with some market analysis. All right, so a hawkish Powell sends equity markets lower. I mean, the S&P has been on something like a 9-day winning streak. It was going to snap at some point. We will get a pullback. This is the start of that. Whether Powell was the catalyst or not, it was going to happen. But as a result of Powell's comments, bonds have sold off and the dollar has climbed. More on the dollar later, of course. As far as the major markets we track go, however, crypto, standout winner on the day. Bitcoin, Ethereum, all had big surges today. Ethereum, very, very impressive in particular. Talk more about that in just a second. Over on the fiat currency side of things, it was the US dollar and by proxy, the Canadian dollar also outshined the competition today. Kiwi dollar also up on the day, but as far as biggest losers go, it was the Australian dollar, the pound, the Swissy, and the euro, all slightly down, and the yen relatively flat. As far as the cryptos go, look at that outperformance from Ethereum. Bitcoin not too shabby either. Bitcoin Cash, however, took a bit of a dive and Litecoin is down on the day too. As far as the market outlook goes, we've got a +2. I'll talk about that in just a second. If you'll notice by looking at this chart of the S&P 500, we're above both moving averages. I thought we might get stuck between the 20 and 50, but we did not. We popped above them, but we might trade below them tomorrow. In fact, I'm pretty sure we will. And the slope of the moving averages remains negative. We just have to see how this pullback plays out, but I am confident as far as equity markets go anyway, we will get another chance to buy stocks over the coming weeks or days, depending on how fast this pullback resolves. As far as news goes, we had the unemployment claims today. That wasn't necessarily the market mover. It was really Powell's comments and the US Treasury auction, which happened an hour earlier around 1 p.m. Eastern time, which was a very weak auction. Didn't even show up on the economic calendar. The auction is usually a snooze fest, but today it certainly was not. Early in the morning, we're going to have GDP data out of England, and then, or is it England or is it Great Britain? I'm sure there are some UK traders listening to this. So I suppose England is literally just England, right? Whereas Great Britain also sounds like England. Anyway. Someone please correct me if you know better than I do. I should know better. I'm Canadian. We're part of the Commonwealth in any event. And then at 10 a.m. Eastern time, we're going to have a preliminary consumer sentiment come out. So that could potentially be a market mover if it's like way past or below expectations. But otherwise, I don't think it's going to cause too much of a reaction. Okay, moving on now to some currency analysis. Dollar, euro, CAD, all on the positive side of the velocity spectrum. Aussie is the clear loser. Ethereum and Bitcoin at a +3 as well. No surprise there given their performance today. Now, as far as potential trades go, we're going to take a look at our currency baskets for this. So for the yen, I'm really glad I called this last week where I say, look, I know I was saying I was bullish on the yen, but that setup didn't materialize. We broke below key level. I'm looking to short the yen on rallies. And that's exactly how that's played out. I'm now neutral on the yen. We have some bullish divergence here that we haven't seen in a while. The last time we saw bullish divergence, and it's not real divergence because the market here made a higher high, so it's not really divergence. But the last time we saw the signature in the RSI, the yen had a decent rally. And given we're starting a pullback in equities, it's possible the yen rallies in the short term. But if we do enter a risk off phase, I'd expect the dollar to outperform the yen anyway. And that brings us to the dollar right here. This is a very steep pullback, following an equally steep sell-off. So last week we sold off quite hard, and this week we've retraced more than 61.8% of that sell-off so far. So we're right in the sweet spot, and there's a whole bunch of supply of dollars up here. So let's see if the dollar does turn around or not. I'm fairly neutral on the dollar at this point. We did take out my key support level, but we popped right back above it. So wait and see for the dollar, in my opinion. I would love to short the dollar. However, I think it's got a lot of room to fall. Swissy doesn't look particularly promising here, but the pullback looks incomplete to me. I think we might have a little bit higher to go, perhaps to tag that 61.8% retracement level, which would be back where we were trading, towards the end of October. So quite a weak Swissy since we topped out on October 20th, but this rally still looks incomplete to me. So we might get a little bit of a down sequence and then up, but I still think we're going to get a relative period of Swiss franc outperformance in the near future. The euro I've been bearish on, but it's defied it's defied my expectations at least. So I'm going to keep things simple and say, hey, I've got a support line here, and I've got key levels to work with, and I'm going to be bullish against those key levels. So the first key level I'm bullish against is today's low, which came in overnight trading. And then I'm bullish against the low from Wednesday, November 8th. And that low in the basket comes in at 134.69. So long as those levels stay intact, I'll look higher in the euro, perhaps against a currency like the Australian dollar. The pound I'm still bearish on, however. We're trading in this channel, and unless we break out the upside of this channel, I'm looking for lower. Next up is the Canadian dollar. We're running into trendline resistance. I think the loonie is also going to roll over and head down. Eventually, I'm looking to retest the lows from July, so I see quite a bit of downside in the Canadian dollar. And then the Australian dollar, I'm still bearish on as well. You can see we found nice resistance on the upper end of this channel. Australian dollar's been all over the place, and I'm hoping we now test the bottom support line of this channel and then eventually break through it. Finally, the New Zealand dollar looks to be pulling back. The lows from November 7th, so that's on Tuesday, and from yesterday are in focus. If we take those out, we could see a little bit more downside. But ultimately, I think the New Zealand dollar could easily find support somewhere around 68, 67.90, and then we can look for higher. Crypto, we had some big moves today. I don't like the bearish divergence. I still like the idea of buying crypto, but I want to buy it on pullbacks, all right? I don't want to chase the strength, and that's all I'll say about that for now. Wait for pullbacks, pick your spots. So in conclusion, just continue playing relative strength and weakness. It's so important. Pay proper attention to position sizing at all times, and always follow the trading plan. That's it for me, traders. See you next time.